guys, this side Anshuman Rao and welcome back to another video. So this video is gonna about a trade breakdown which I took recently, like not recently, which I took today in London session around 12, no, around 1:30 IST, and also that was a positive trade. And recently the last trade was a losing one, and I will also break down that trade also, a losing trade also, and I will also explain the psychology behind that trade. And most importantly, this video is also gonna be about why data is why data is the most important thing in retail trading, or even if you are an investor, or especially in day trading or forex or stocks or crypto, whatever markets you are trading. If you are a day trader or intraday or scalper, this is the one of the videos that will help you, and it will help you to realize why data is the most important thing in the trading industry. So let's jump into this video, and let me first start with a simple thing. And the let me start with the trade breakdown first. The trade breakdown was around let me open the MetaTrader first. So here is the MetaTrader. Yeah, here is the MetaTrader. Yeah, and let me show you my history first. The toolbox, trade history. Yeah, this is the trade history. This one is the trade history, guys, according to sequence wise. So today is 19th November, and these are all the trades you can see up till here. Yeah, these are all the trades: minus 60, minus 5, minus 5. And I'm going to break down this trade 128 positive trade, and also this minus 77, this losing trade also. And these three trades were unnecessary trades, stupid trades, and these trades were executed before the London session, in the random session, which is out of my setup, and I completely accept that mistake. you know Mistakes happen, and we have to clarify it. And this was quite unnecessary losing streak, and it happened due to not trading in the proper session in which your setup actually follows. So this is what you can say. This is what happens when you don't trade in the when you don't trade in your session, like your setup, whatever you are trading, whether it's ICT, SMC, or supply demand concepts. If you are a day trader and you are not if you are not trading the proper session according to your setup, then you are going to face a losing streak for sure, like 101% for sure, because sessions matters the most. Like for me, London Open is the best time, and mostly I make money in the London Open and during London session. So, and this trade, you can see the minus 77 dollars trade. This was placed during New York session. So in mostly New York session, let me zoom in. Yeah, so in mostly New York session, you can say I kind of, let me bring this up. So yeah, this was the trade during New York session, and this was during this is a pretty much break even trade, so don't consider it. And this one was during London session, during London Open, and this was the complete set. This was the trade that was completely in my setup, and I grabbed the opportunity. Yeah, only one problem of this trade was I exited early, because my target was like I didn't hold on to the profits. And yeah, this is one of every trader's mistake, that they don't cut their losses quickly, and they don't hold on to their profits you know for a longer run. So that's why they face bigger losses and small profits. So this is one of the mistakes also I have to clarify, and I have to, what I will say, I have to improve. Like I have to cut out as much as it is possible. So let's break down the trades. Let me get into the trading view, and it was around London Open. Let me show you the 130 candle of IST, and let me tell you, this is a UTC plus 530, the Indian Standard Time Zone. And according to Indian Standard Time Zone, 130 is when the London Open starts. So 130, yeah, this is the candle right here. Let me tell you about the 30-minute time frame. That's it. Yeah, that's it. So this was the trade, guys. This was the trade. It was a bullish trade, by the way. I was in a long position in gold around 130. This was the trade. Let me tell you the logic behind this trade. And gold was pretty much, there was a upper resistance here on the left hand side. And it is a simple, like I keep things as simple as it is, you know because keeping things simple will avoid that analysis paralysis type situations. So there is a upper resistance over here. Like before doing this all things, let me tell you, first of all, in the daily time frame you can see gold is in a bullish trend. you know in a daily time frame there is a major support on the left hand side, and by respecting that support, the trend reversed here from this point, and it is a bull in a and it is in a bullish trend. You can see clearly that. And in a 4 hour time frame you can see that it is still in a bullish trend. So to the a strong confirmation bias was produced, because in 4 hour time frame is also the trend is bullish, and in 1 day time frame, which is the largest time frame that like I use, in that time frame also the trend is bullish. In 1 hour is bullish, 4 hour is bullish. So and it's a no brainer, like a confirmation bias for me to. And it was, I'm more comfortable in bias in gold. So I was searching for bias and for the perfect entry. This was my setup plan. So this is a the trend was in a bullish trend, and for like in Singapore and Frankfurt session overlap, the trend kind of consolidated and started ranging. So in this ranging what you will say, in this ranging time period, I got a resistance over here, and also I got a support over here, in the common rejection point. This is the common rejection point. And you know what, like if the candle would have broken down this support right here, I would have not still executed the order for shorts in gold, because a strong confirmation bias was produced during when you will see the daily time frame and 4 hour time frame, and that is like that is in the direction of buy side. So taking shots in gold wouldn't make any sense at this point. And it also broke out this support, you can see here, and it didn't retain much as the buy side did. Covered around, you can see, till up till here it covered around 30 pips, not much. But as you can see, if you even after the candle closing, if you would have executed the order and hold on with patience, 128 pips was covered. So it's like you should develop a confirmation bias before placing the trades in higher time frame. So it broke out this resistance, and like it broke out this supply zone over here, and I executed the order kind of like it was an impulse entry, and I exited pretty much in you can see where is the closing price. Let me show you the closing price, because I didn't hold on to this trade, and it was an early exit trade. Otherwise I would have made insane gains. But my exit plan was my exit plan was ready, and according to my exit plan the TP was fixed and it hit the TP. So what can I do? That's one of the problems. So like I didn't have you can see I also didn't have any TP, by the way. So I exited without having a TP. Like I didn't have any TP. Like what I will say, like I was planning to hold on to this trade, but in the end, early exits. This is also one of my mistakes. I will like not hide this mistake for a video purpose, because I'm video journaling in the end. So I have to tell my mistakes so that you don't make it. Early exits and early entries, whatever. But everything should be as perfect as possible, like as good as possible. Nothing can be perfect, you know but things can be improved. So this is one of the problems. We cannot see a closing price over here, but yeah, I exited pretty much around this is the 1 hour time frame. Let me show you the 30-minute time frame. So it broke around here, I got the impulse entry. So I think I pretty much exited around here. Here I pretty much exited around here. So I didn't cover up this um, up till here to here. I didn't cover this move, but still then okay, it's still a good trade, to make break even into positive. But still then, let me tell you about this trade over here, this losing trade over here, guys. So this losing, the reason behind this trade was it was executed at the sell side, but due to the liquidity sweeps, the SL was cut out. And the market is probably ranging right now. As you can see, it's consolidating in a heavy ranging section, in a ranging zone, as you can see here. But my target was to take sells. As you can see, my order was, let me cut out this zone. So this was a common rejection point, and till I anticipated the price to continue in a bearish trend, because from here, like it is not in my setup, but I would take a like complete blame for this, because it is not in my setup, but I still become over smart because I know this. So you shouldn't like even do this. But the my one of my mistakes was, I considered it as a head and shoulders pattern, but I didn't know what a head and shoulders pattern was. But I considered it, this is a head and these are the shoulders and something like that nonsense. So this is something due to which this is the one of the reasons that I entered this trade, like it was an impulse entry. Okay, so I thought due to a head and shoulders pattern, the trend might reverse and continue in a bearish trend. So this candle right here opened here, and it continued in a bearish trend. The trend was bearish, and I thought this bullish candle over here was a retracement, and it created a support, and this was a common rejection point, and it broke out the common rejection point, as you can see. And I was in a unrealized PNL was around $26, and up till here. Then it left a wick, and boom, my stop loss was around here, my TP was around here, you know but again, it is a, as you can see, it was a one, not even 1:1 trade, which is a absolute nonsense activity done by me. But it's fine, I am just telling you that you won't repeat these mistakes as I do. uh, so yeah, from this zone again it rejected back and made a doji, and this can be a confirmation candle for the trend to be, this bearish trend to be reverse, and continue in a bullish trend, sorry, bullish trend. And this is a common rejection point, as you can see. I'm saying you the next setup of my trade, like if it would have, if the time, like as you can see here, let me show you in the CTrader platform. uh, Now pretty much around 10:43 p.m. in IST, Indian Standard Time, New York sessions are going on. Yeah, in a CTrader platform, yeah, you can see here trading session New York sessions are going on. So yeah, that's the thing. And let me execute one of my orders here, because the setup is clean and quite good. So yeah, I executed the order, and this is a live execution of the order, because in front of you I executed this order in a New York session, and the volume was high, and it broke this resistance over here. You can take next TP target is at here or here, or you can say here, three targets are there. You can target for this. First TP will be here, partial quantity booking, and second partials, and third full quantity booking over here, right here. And SL would be, I think, below this candle, and it is a good opportunity. Let me show you the trade, how the trade is going. Yeah, $3 positive. Okay, no problem, because our lot size is only 0.14, so it's a minimum lot size with which I'm trading right now. So this trade, which I took live in this video, I will break down this trade in the next video. And also the video kind of got long, so I think in the next video I will break down this trade over here, that how it goes. And also in the upcoming videos I will also explain you that why data is the most important thing in trading, and why you should maintain your data whole throughout your journey. So this was it for the video, guys. Hope you like it and hope you enjoy it, and most importantly, like you got something to learn, and hope your time is utilized in a very very valuable way, like just like valuetainment. Like kind of, you might be understanding that this video is not for entertainment purpose, this video is for valuetainment purpose. So yeah, this was it for the video, guys. Thank you, bye bye, peace out.